deliver consistent high purity products to
Gary, it's great to have you back on with the news on the decision to test Borba's potential production from the Kione and with the production update on the recently acquired assets in Canada. I'd like to turn first to Borba if I can. I'm sure this has caught a few investors by surprise, so can you take us through your decision here to pull up before drilling the lower zones and the rationale for testing the Kione only?
Sure. It wasn't just investors that were taken by surprise, and I think we were very surprised by the log results as well. But as background, we're drilling very slowly subsequent to the last release we made to the market. And we were getting more concerned, that extended time drilling was putting at risk what we'd already thought we had behind in the wellbore, in the open wellbore. So, we thought we had a good zone in the Gwynder and other interesting zones all the way down to the 8,800 feet or so that we were at. So we made the decision to run what we call an intermediate set of logs to assess what we had, and then multiple outcomes from that. We can assess, what's the best way to go forward. Should we stop and run pipe over the existing good zones that we had if they were confirmed by the logs, or a number of other alternatives, and how better to drill the remainder of the well. So we're about 900 feet short of TD, and so that was the decision we made. Sometimes we just got to be pragmatic. So we made the decision to run the logs. We got the logs, and we were disappointed by the quality of the potential reservoirs in the Gwynder. We ended up with estimate maybe 10 feet of pay in the Gwynder and a few feet of pay in two or three other zones. So what looked pretty good on mud logs didn't look so good in the hard light of day with petrophysical logs in front of us. So we then assessed that and said, well, we're not sure how we can drill that much faster going forward. We had a couple of tricks up our sleeves, but which we could use. But when we ran the synthetic seismic, we decided that the events that we were already seeing were representative of what we had ahead of us, and the events were representing hard streaks or a combination of hard streaks and silty zones that were saturated with gas, and that's what we thought we probably had. Well, we're pretty certain that's what we had ahead of us. So we made a decision at that point to plug the lower part of the well back up to the casing shoe, and to then resort to testing the Kione, the 92 feet, 137 feet potential pay in the Kione that was already safe behind the 9 5/8 inch casing.
Okay, so you've reported 90 feet of pay in the Kione and some good flow rates from one offset well. And I guess the fact that this is a productive and proven formation in the Sacramento Basin, it's something else that we need to take into consideration here. Can you take us through the next steps, the likely timeframes, and what else can you tell us about the Kione in California?
Well, first, the Kione has been a very, very good producer in the northern part of the Sacramento Basin. Many wells produce from the Kione and produce at good rates. It's not just one offset well that produced good rates from the Kione. There were 2 or 3 wells within the Ord Bend field that produced good rates from the Kione. So there were some good examples there, and that's what we're hoping for out of this. And if we get a good flow rate, the chances are that we'll get a good amount of production out of this, and get our money back for this well times over, multiple times over. So that's what what we want to do, and then we'll assess where do we go from there. You always reassess after you've got results, and every well leads to new ideas and new opportunities. I suppose, Alex, the timing, we've got the big rig off site, and then bring a small workover rig on. We could be testing within 3 weeks is the current plan.
So following production testing of this well, regardless of the result, where to next for Sacgasco in California, and how has this result shaped your forward plans?
Obviously, it means that we won't be rushing out to drill any development wells on the deeper sands that we're hoping for at Borba. So, that means that we'll focus on the production and increasing the production. After all, we only explore, as a means to increasing production anyhow. So we'll take the data we've got here from this well, we'll integrate it into the information we already have and know about the basin. We will look at the production enhancement opportunities that we have in our portfolio. We are doing some other exciting things that I'll let shareholders know about once they're coming to fruition in the basin to assess the potential. And then we'll reassess how best to go about adding the production beyond what the portfolio already has in the opportunities that are there in front of us.
So, Gary, sort of reading between the lines, it seems the focus is now very much about building cash flows, and you now have a portfolio of assets to do this. It seems that the Alberta Plains assets are now throwing off some good cash. Can you take us through the potential for these leases, their upside, and that of Red Earth as well?
Sure. Yes, we want to build a company that's sustainable and one that we don't have to come back out to shareholders every time we want to do a significant event. So that's why we're trying to build production. We'll try and build on production in California, but Canada is providing very low cost opportunities at the moment. And we've had ownership of the Alberta Plains assets now for a month or so, and they're on target. When we announced the acquisition, I think we were doing roughly 100 barrels a day gross. We said we were aiming for 500 through restorations. We're now doing over 600 gross barrels of oil equivalent a day. We're looking to add in 300 barrel a day type tranches to that asset. In the meantime, in the March, we added closed on the Red Earth acquisition. That added 1,000 barrels a day gross, 300 barrels a day, a little over, to Sacgasco. And so all up, we're doing 420 or so barrels a day. And that's good cash flow. If that was netting, $20 Aussie a barrel free cash flow over and above lease operating costs, that's I think $3 million or more a year in cash flow. So that then provides the opportunities to do other things.
And just finally, Gary, I understand Blue Sky have introduced 2 solid transactions. Do you have your plate full, or are you assessing more assets with them?
Yes, we are assessing more assets with them. They're a good operator. They know how to sniff out good deals, and they know how to change the lease operating statement so they go from being marginal to good cash flow producers. And so, we want to partner up with them to look at more. We have other assets in our sites, and we look forward to letting shareholders know about those in the near term. We're already a significant producer on the ASX, moving up the producing. There's not that many producers on the ASX, and we're moving up the scale of those very quickly. And we'd hope to do that again. We also know what other assets we'd like to have ownership of, because we can see opportunities to change them in our own right, in our own backyard as operator. And so we'd love to move those forward, and are actively looking at ways of moving those forward as well.
Thanks, Gary. Really interesting chat, and obviously a slight shift in focus, but Sacgasco's got plenty on its plate, and I think it's still all systems go moving forward. So thanks very much for joining me, and all the best.
Thank you, Alex. I appreciate the opportunity again.